Welcome back to our portfolio, everyone. And today we're going over the top 6 REITs you can buy right now. The entire real estate sector has been hit extremely hard by this pandemic, and I believe retail consumer behavior has been changed forever, and the way we conduct our working day-to-day lives has been completely changed. So today we're going over 6 REITs you can take a look at that are going to continue to thrive during this new transitional economy where we spend more time at home and more time in the digital world. So these 6 REITs still operate within the real estate sector. So if you're looking to have a nice solid portion of your portfolio in real estate, but you want to transition away from the traditional retail investment or office space REITs, these are some stocks you want to take a look at. So first we're going to jump into how the overall real estate sector has been performing. So this is Vanguard's REIT ETF. You can see here pre-pandemic level around $99 a share, currently trading at $81 a share. So the REIT sector is still down 18% from pre-pandemic levels. Other sectors of the market like tech has seen huge growth from this pandemic, but of course the real estate sector has been hit extremely hard and is not fully recovered just yet. So we're going to break down some aspects of the real estate market and a couple different REITs that are actually going to thrive during our new stay-at-home economy. Before we do that, everyone, as you know, I'm the Gen Z investor, and I post videos on this channel every single day that talk about different stocks you can buy, overall stock market performance, and any other big stock market news and headlines. So please like and subscribe, and we're going to get right into it. The first REIT on our list to take a look at today is ticker symbol AMT, American Tower Corporation. Currently at $255 a share. On the 1-year chart, they're up 19%. So you can see they saw March lows, but have fully recovered and continue to grow. On the 5-year chart, they're up 164%. So they have some beautiful long-term share price appreciation over the past 5 years. If you don't know what American Tower REIT does, they're essentially a data and cell tower REIT, and they actually own and operate over 181,000 communication sites. So a very diversified REIT. If we take a look, of course, with real estate investment trusts, we like that dividend income. Real estates actually don't pay dividends, but they pay distributions. But of course, we like that consistent either monthly or quarterly income coming into our portfolios. So if we take a look, AMT, of course, had that beautiful long-term share price appreciation, but they also pay out a 1.72% dividend yield. And they've been growing that dividend at an insane 22% 5-year average over the past 5 years, which is absolutely incredible. If we take a look at their dividend safety rating, they are ranked 78, so that dividend is still considered safe, very unlikely that that dividend gets cut anytime soon. And what we expect from these REITs and all these different types of REITs that are thriving during the stay-home economy is we want to see them continuing to grow. So when the overall real estate sector is declining, we want to see these companies grow in year in and year out. So you can see here from AMT, they have nice growing revenue each and every year, followed by a nice similar trend with regard to net income, which is growing year over year. The second REIT on our list today is Equinix, ticker symbol EQIX, around $792 a share. Insane share price appreciation over the past 1 year, up close to 55% on the 1-year chart. 5-year chart, they're up 183%. So once again, long-term beautiful share price appreciation with this REIT. Equinix, if we take a look at what this REIT actually does, you can see here they are a data center REIT. So another type of industry that is going to continue to grow as we shift towards a more digital economy. And of course, with that distribution income, they yield out around 1.34%. Been growing that yield for around 5 years. And with regard to dividend safety, they have an 86 dividend safety score, which is very safe. So once again, another distribution that very unlikely to get cut right now. So if you're looking to bolster up your real estate sector in your portfolio, Equinix may be another one you want to take a look at. The third REIT on our list today is ticker symbol ARE, which is Alexandria Real Estate Equities, around $174 a share. Once again, beautiful short-term price appreciation of 22% over the past 12 months. Moving over to the longer-term view, up 88% over the past 5 years. Market cap at $22 billion. Take a look at that distributable income. You can see here they are yielding out around 2.43% and have been growing that distribution for 10 years. With regard to dividend safety, it is at a 76 dividend safety rating. So once again, another safe dividend where very unlikely that it gets cut anytime soon. The fourth REIT on our list today, we're going to rapid fire through these REITs, is Digital Realty Trust, ticker symbol DLR. Around $157 a share. 1-year chart up an insane 38%, so continue to thrive over this past 12 months. 5-year chart up 145%, so continuing trend with all these REITs so far. Beautiful long-term share price appreciation. Digital Realty Trust is another, data center type of REIT. They provide data centers, co-location, interconnected strategies of customers across the Americas. This is another type of company that is going to continue to grow as we shift all of our purchases online, we boost up cloud computing services, and we shift to a more digital world. Taking a look at their distributions, you can see they are yielding 2.8%, and they've been growing it at over 5% on the 5-year average, which is beautiful to see. And they've been growing that dividend for 15 straight years, which is incredible. With regard to dividend safety, they have a very safe dividend rating at 94. So once again, another distribution that is very unlikely to be cut anytime soon. Any dividend or distribution from Simply Safe Dividend that's ranked very safe, very unlikely that it gets cut anytime soon, because they do a great job of evaluating company financials to determine if a company can continue to fund that dividend safely. Moving on, the fifth stock on this list and the fifth REIT to take a look at right now is Crown Castle International, ticker symbol CCI, $163 a share. Once again, another 23% growth on the 1-year chart. 5-year chart up 100%, so beautiful share price appreciation over the past 5 years, with close to a $7 billion market cap right now with this REIT. So Crown Castle owns and leases more than 40,000 cell towers and approximately 80,000 route miles of fiber supporting small cells and fiber solutions across every major US market. So another type of REIT that is going to continue to grow as our shift towards improving our digital lifestyle grows. With regard to their distribution and their distributable income, you can see they're at 2.9% yield currently. They've been growing it for 6 years. And with regard to how safe their distribution is, they have a 61 dividend safety score. So somewhat on the low side, but still considered safe. Not even borderline. Simply Safe Dividend ranks dividends below 60 at borderline safe. So still considered safe, not at that borderline just yet. But of course, not as safe as some previously REITs mentioned in this video so far. Moving on to the final REIT on this list of REITs you got to take a look at right now. It is Prologis, ticker symbol PLD, around $104 a share. 1-year share price up 33%. 5-year price appreciation up 160%. So all of these REITs so far may have somewhat lower yields than what you're expecting from the real estate sector, but have some beautiful long-term share price appreciation. So of course, when you're investing, you're looking for a great total return, which is dividend plus share price appreciation. So far, all of these REITs have been providing great long-term returns, and I believe they will continue to grow and continue to appreciate in share price over the next couple of years. Moving on to their distributions, you can see a 2.2% yield right now. They've been growing it for 7 years and have close to a 10-year distribution growth rate over the past 5 years, which is absolutely incredible. So they're averaging a 10% growth over the past 5 years, which is insane. So that 2.2% starting yield is growing rapidly and continues to compound very nicely. With regard to how safe their dividend and distribution is, it is at, again, a 61, so still considered safe, not as high as some of the other dividend safety scores we saw today, but once again, a still safe distribution you can take a look at for your portfolio right now. So those were the top 6 REITs you can take a look at, everyone. As you know, the overall real estate sector has been hit very hard on the past year. On the 1-year chart, the overall sector is still in the red, around 10%, but all of these REITs that we went through today have been thriving or have over double-digit growth in the past 12 months, which just shows you that some aspects of the real estate sector are still growing and still thriving. So you just have to do your research, take a look at which type of sectors in the overall real estate market are succeeding right now and what sectors are going to succeed into the future. So of course, some aspects of the real estate sector are underperforming others. Of course, like different malls and office streets right now have been hit extremely hard and have not fully recovered yet, only because we're having a new shift and a new trend in our economy where less people are going to be going to a physical office every day for work. Less people are going to physical malls every day to work, to shop. So it's very interesting to see how this real estate sector performs as a whole. And if you really want to get a deep dive into the real estate sector and you want to pick individual REITs for your portfolio and you want to go somewhat into these specialty REITs, not just the traditional retail, office, or residential, take a look at some of these 6 REITs I mentioned today. All of them have been growing very nicely over the past 5 years, and I believe will continue to grow and have some nice share price appreciation moving forward. They'll operate within similar subsectors in the REIT industry, but all operate in different locations across the United States and worldwide. And I believe they have the infrastructure, the balance sheets, and of course, they're providing some nice distributable income to investors that I believe will continue to grow into the future. So thank you for tuning in, everyone. I'm the Gen Z Investor, and as you know, I post videos every single day on this channel, so please like and subscribe, and I will see you in tomorrow's video.